Alright guys, we've opened the chart on the quotex broker. I want to teach you this strategy on this broker, and with its help we'll make a few trades together on this platform. The first thing to note is that we're going to set the candlestick time frame to 30 seconds. And of course the trade time should be set to 1 minute. The time frame is set to 30 seconds and our trade time is 1 minute. To easily and freely register with the quotex broker, click on the link in the video description. Let me explain it to you. The first indicator, or rather oscillator, that we need is the stochastic, guys. Let's keep the settings on default, but we will change the overbought level from 70 to 80 and the oversold level from 30 to 20. With these settings, we'll add it to the chart. You can change the colors according to your preference, but it doesn't really make much of a difference. So that's our first oscillator added to the chart. Now let's move on to the second oscillator. Which is none other than the RSI. Alright, we'll leave the RSI with its default settings as well. Alright guys, both of our oscillators are now added to the chart. I'll make them a bit larger so you can see them better. The core idea of this strategy is similar to what I've taught you before using different indicators. The basic concept remains the same. In this strategy, we are looking for points known as overbought or oversold areas. For example, when the price reaches an overbought level, we expect a price drop to follow, meaning the price will go down. Conversely, when the price reaches an oversold level, after a significant decline, we expect the price to rise. We aim to trade during these trend reversals and turning points that occur at overbought and oversold levels. The goal is to learn how to use these indicators to identify these points of exhaustion and open our trades at the right moment. Alright, for this, we will be using the stochastic and RSI to help us. Now, let me make these a bit bolder. I think it'll help, especially for those watching the video on their phones, to see it more clearly. Let me see where I can increase the thickness. Yes, that's done now. Maybe this way it will be clearer in the video. I think this way, the indicators and their lines are more visible on the screen, so even if you're watching on your phone, you'll have a clearer view. Now friends, both of these indicators, RSI and stochastic, have two lines. Look closely, each of them has two lines. The RSI has a 70 line and a 30 line. And similarly, the stochastic has an 80 line and a 20 line. These two lines represent the overbought and oversold levels. That means the 70 on the RSI and the 80 on the stochastic, as well as the 30 and 20 on the stochastic and RSI, indicate these zones. Now we could have set the RSI to 20 and 80 as well, but 30 and 70 are sufficient, and it's not necessary to make that adjustment. What we need to look for is a point where both indicator lines are either in the overbought zone or both are in the oversold zone. Like here, look at this point. Our RSI line, the green one, is exactly below the red line, meaning it's below the 30 level. Similarly, on the stochastic, you can see that both lines are below the greenish line at the 20 level. So this is an oversold condition, and we expect the price to start rising from here, reversing the trend and moving upward. Now, if you look closely, you'll see that the stochastic shows an oversold condition, but at this point, the RSI isn't showing anything. Even here, where the stochastic has moved completely below its 20 line, The RSI has just barely touched the 30 line and hasn't moved lower yet. It hovers around this line, and only at this point does it start giving us the oversold signal. The key points in this strategy are first that both lines of the stochastic, the red line and the green line, must be within the overbought or oversold zone. Whether it's overbought or oversold, both lines need to be in that overbought or oversold area. The green line should be moving towards the center. Now, when we are considering an oversold condition, the green line should be moving towards the center. For example, the green line should initially be below the red line and moving upward, meaning its trend should be curving upward like this. And if, for example, we are in an overbought area like in this region, the green line should be above the red line and moving downward. We need to see that its direction is moving towards the bottom. When this happens, and if the RSI line is also in the overbought zone or at least touches that overbought level, that's enough. It just needs to reach or be below that line in this zone. Here, when a new candlestick starts, we enter the trade and our trade duration is 1 minute. The candlestick time frame remains 30 seconds, but our trade time is 1 minute. Now, if you look here, you can see that the green line is moving upward and has even crossed the red line, which is an even better signal. The RSI is also in its oversold area, and you can see that this is exactly the point where the trend reversal occurs. Each of these candlesticks represents 30 seconds. If we had entered the trade on this candle or even the next one, our trade would have closed profitably right here. Now for the opposite example, in an overbought situation, you can see here that the stochastic shows both of its lines above the 80 level, indicating overbought conditions. This means the price has gone up significantly, and there's a high probability that it will reverse. Overbought and oversold signals tell us that the price has likely moved too far in one direction and might reverse soon. You can also see that the green line is above the red one, moving downward and even crossing below the red line. At the same time, the RSI is in the overbought zone, with the tip of the RSI line slightly above the 70 level. Right on this candlestick, the trend reversed and we had a price drop. If we had entered the trade right after this red candle started, our trade would have closed profitably after 1 minute, meaning by the second candle. This is how the strategy works, and I've explained the process. I'll go through the charts, find a few positions, and place some trades to show you how trading with this method works. We'll see the results together to check if it's effective. Stay with me. Here we can see that both lines of the stochastic are in the oversold zone and the RSI is approaching the 30 line. If the green line of the stochastic starts moving upward and crosses the red line, and the RSI at least touches or moves past the 30 line, that's when we enter a 1 minute upward trade. Alright, this has happened here, and with the start of the next candle, I'm opening the trade. Alright, this trade closed with profit. Now look here, in this area, a few candles formed, but the RSI couldn't reach the oversold line, which is the 30 line. So I didn't open a trade here, even though the stochastic was in the oversold zone, and the green line tried to cross the red line a few times. This is important, guys. You need to fully understand and correctly apply strategies. The moment the RSI touched the line here, I realized the green line of the stochastic had crossed the red one, and I knew the price was going to rise. After it touched that level, I entered the trade, and as you saw, our trade closed with profit. Alright, it looks like another good opportunity is forming here. Both the stochastic and RSI are in favorable positions. The RSI has touched the line and the stochastic is in the overbought zone, with the green line crossing the red one from above. We can enter the trade on the next candle. As you saw, this trade also ended successfully. I'm going to wrap up the video here. I encourage you to definitely try this method and strategy on your demo account. Make sure to share your results in the comments below this video. This is another example of a strategy using two oscillators. Strategies, even those involving indicators like this one, need to be fully understood. You have to grasp what they are telling you and recognize the exact moment to enter the trade, which is very important. Now look here. Exactly at the point where the RSI touched its 70 line, I noticed that the green line of the stochastic made a crossover and started moving downward, crossing the red line. Both indicators were in the overbought zone at that moment. I realized that this was the moment to enter the trade, so I opened my trade with the start of this red candle, and I easily made a profit. As you saw, I did 3 trades here today, one after the other, and all 3 were successfully closed with a profit. Be sure to try this method and share your results in the comments. Until the next video and another strategy, take care.
Dear friends, to make sure you don't miss any of our videos, please subscribe to the BS Academy channel. Also, activate the notification bell so that you are informed as soon as we publish new videos. Thank you for your support.